my partner in crime. Looking for my partner in crime. I'm looking for my partner in crime.
Good morning, everyone. Hello, welcome. It's Monday the 21st of July. How is everyone doing? Let me know in the comments below. How you guys doing? Good morning, Kalimera, everyone. It's Monday. It's a fresh day, fresh week. Let's see what are we going to see in the charts. What is going on? Let's have a look. Meanwhile, let me put the music on the background so we have a little bit, vibe going on. Get us in the mood. Good morning, everyone. Right, I'm going to wait for a few seconds for everyone to join us, and then we're going to start immediately. So here's the music. Keep us nice and positive. Right, what's going on with Bitcoin? What is going on? It's moving, it's on the move. Right, okay, this is a 90-minute time frame, so let me go a little bit lower. On the time frame, let's go down to 15. Let's have a little bit look and see what is going on here with it. Right, on Friday, that was the area that we were paying attention. Let me mark it. So that was the area. Okay, so that happened while we're doing live. So we marked the focus area, and we can see right on the live that the price was breaking out. Okay, and I have another buffer zone. Okay, let me go to smaller time frame for you to understand the buffer zone. So that was the little buffer zone, and I said, if there's not going to be any bounce in this buffer zone, okay, there is a possibility that it's going to continue to go downside, and this is what happened. Okay, so out of the buffer zone, we lost that level, big deviation, came back, did not manage to stay above as a support, right? So no support here. Okay, so it got rejected and fall down, found a support for a little while on that little range, a deviation, but claimed, look at the difference here, it claimed and stay above. Like here, in trying to come up, it failed to stay above, tried to come up and failed to stay above, and then it got rejected. Here is a different example. Okay, this is an example that you understand that the fall is towards the end. Okay, the fall stopped falling, instead was still evolving, right? So you can't see anymore the price going lower. A small deviation, a liquidity grab, triggered some orders, and then it came back and reclaimed this level. Same thing here. All right, you can see what happened here. That was inside the weekend. Look at that up button wick. Okay, especially that one here. So it's telling you that was a very, very sudden move to the downside, triggered a few orders, came back and quickly reclaimed above 117. Okay, so that was that happened midnight. Okay, early hours today. So that happened midnight. So they took out these lows over here, that liquidity of this region. Okay, so that liquidity is being taken out here, right? Can you see that? And also there's some imbalance going on in here in this region. Okay, so I'm going to do this as imbalance IMV on the smaller time frame. Okay, and you can see that it's been touched in this area multiple times. Okay, so that imbalance, that liquidity, it was a magnet. Okay, and look at that, right? Touch and go, touch and go. Okay, so there's no more imbalance anymore down here on the liquidity, which is below the red line. And you can see now that very quickly after midnight, you can see early hours of Asia. So this is Asia station, 4 o'clock my local time in the morning. It's after Tokyo, right? It's when Tokyo, and later on is China and Singapore are signing for the sessions. And you can see a very strong move to the upside. Okay, once again 119 at G level, we see a rejection. Okay, let me get, just for a little bit of understanding, you can see here what's going on. This is your 50% of in the between range. There it is. Okay, so you can see that it went up, hit the 50% between these two guys here, claimed it, right, hold it, now it's pushing to the upside. So it's quite bullish, quite positive for the time being. Okay, now a lot of people have the question, are we gonna break the all-time high? Are we gonna go back to 122? Okay, look at that. Technically speaking, okay, if I take the path, you have this drop. Okay, this is your last high, the all-time high as well, push to the upside. Okay, and it's coming down, and what's going on here, we have a consolidation. Okay, so we have a lower high, but we haven't got yet a lower low. Okay, so this kind of confusing state, okay, and this is kind of the accumulation phase. A lot of people will be very bullish this week and say, oh, look at that, it's going up, but we need to be careful. Okay, why? Because the liquidity that sits down here. Okay, so let me grab this guy here over here. There's liquidity down here. Okay, so let me do this liquidity. Right, so there's liquidity down here. Okay, and it's hitting. So that is a point of interest. Okay, there is a possibility that sometime this week there's a high chance that the price, Bitcoin, the price action is going to go all the way down here to dive and take out liquidity and flash, technically flash all the guys here. Let me do these with a different color that they want to go long. So that's why I put a green here. Okay, so all these long orders that are sitting here, okay, they have liquidity sitting down here below 115. So if they're market makers, right, the people that are controlling the markets, if they want to flash out all these high leverage people, okay, because they're creating accumulation, okay, don't forget that we have an all-time high. So the market makers very easily can dive a little bit lower, dive inside the liquidity pool, give the intention to people that, you know, maybe a better play is going to be shorts. So you have loads of people going short here. Okay, so I'm going to do this red. There it is, red. And you have plenty of liquidity sitting up here. Okay, so I'm going to do this liquidity pool. So this is a setup that we have now. We have an accumulation phase. Okay, and you have both parties building up in this setup. So you have longs that they want to go higher, and you have shorts that they're shorting. Okay, and the market makers right now, what they're doing, they're accumulating. They are buying time, so to say. Okay, I'm not going to say wasting time. They're accumulating, right, going sideways, and they're trying to feed both parties, give room for both parties to build our positions, either to go lower for shorts or either to go higher for longs. Okay, and then you're going to see a flash out, and the flash out can happen like this. It's going to come up here and then come down, or you can come down here first and then trying to go up and then come down again. There's plenty of possibilities. Now you cannot guess. Okay, there's a lot of theories behind it. We can go on and on all day, all week, but this is not what we do. Okay, what we do, we mark the levels. We have the understanding that we have liquidity zones above and below. Speaking of which, let's investigate a little bit. Let's go to CoinGlass and let's investigate a little bit. Where are the liquidity pools? So go to liquidation, choose a model, make sure you dial the symbol type, not the pair type. Okay, and just go a little bit higher time frame, maybe a weekly time frame on Bitcoin. And let's have a look. Where do we have? I can't zoom in on this one. Okay, let me go even further and let's see if we can zoom in. You can see that we have loads and lots of liquidity sitting 115. You see how yellow that is. And the next point of interest is a lot of people are building shorts 120 and also 121, 122, and you see there is evidence that people taking orders like shorts on 140, 141. Okay, so let me go to a higher time frame and see all the build up. All right, okay, so there's the build up. You have a better picture. You have plenty of liquidity sitting down 115. You have some above 120, 122 where the all-time high is, and majority of them you see that you've got 130, a big build up 130, another build up 141. Okay, so that's the area 120 that I marked, and 115. Look at that, spot on, right? Is that right? 100, 116, 115, there it is. So it's plenty liquidity sitting down here. There's more liquidity further down, okay? But before we're going to speak, the ones that are too far away from us, let's see the ones that are next to us, okay? So the ones that are very close to us is around 115 and 120, there it is, okay? There was a liquidity 119, 120, okay? Kind of tapping into that zone, okay? You can start with a weekly. A weekly is a good indicator, so to see, for you to see what's happening. Okay, plenty liquidity 115, and it's a quite nice build up 120, 125, the previous all-time high. Okay, so there we have it. Okay, so I marked my liquidity around 122 all-time high, 125. 125 is too high, but let's say 123 around this, guys. 123. So between 120 and 123 is the liquidity that I see, that I feel. There's plenty of shorts going on here, 120. Plenty longs around 117, and there's a lot of liquidity sitting down 115. Okay, so that is a giant magnet. Okay, so there is a high possibility, because the price action is kind of in the middle right now. Okay, there's a high possibility you can do both ways. You can go and attack that liquidity or come down and attack this liquidity. Okay, remember, price action, okay, it doesn't matter what market it is, price action for to survive, to be healthy, to be driven, it needs liquidity. Okay, so all liquidity pools, you should treat them as a magnet. You know that it's going to be a point of interest, and the market is going to move towards either side, but it's going to go for two things. Either it's going to go for liquidity pool, or either it's going to go for imbalance. And how do you mark the imbalance? You need to go to the daily. Okay, the most ideal time frame for you to see imbalances is on the daily. Okay, there's one big imbalance going on here. Right, so I'm going to mark this IMB. Okay, there it is, and that is way lower, and the average is 113 all the way down to 112. okay, or even lower, 112, okay, and there is, let's say, a liquidity imbalance inside that huge wick, okay. So let me mark that wick, okay, and you see the average price of that imbalance is 121, okay, which makes sense, okay. That chart that we're seeing from CoinGlass, that 120, 121, there's a lot of build up here, okay, fresh build up, 120, 121, okay. So now you know, okay, that you have two big liquidity pools and plus two imbalances, right? So the market is going to go after them, okay. That's what, you know, if you know how to mark these levels, these areas of interest, so to say, on your chart, then you can understand why the price action is going to go towards that area, to that level, and why it stops there and why it reverses. You know, sometimes you will see a continuation and the liquidity lower is going to come back and visit it later, okay. Once you understand this concept, that the price action, that doesn't matter what market it is, it doesn't matter what chart it is it Bitcoin, is it Ethereum, is it Nasdaq, is it, you know, Tesla, is it Amazon, is it Google, it doesn't matter what chart it is, the price action to be healthy, okay, that stock that you're looking, that crypto that you're looking, that forex pair that you're looking, currencies, right, they're going to go after liquidities, okay. This is the way that the market is going to be driven, okay. That's why you see, never mind that you see the candles, but you see the price going up and then it's coming down and then it's going up again and then it's going down and then it's going up, and you see fluctuation. You see that the price, that's the lowest, that's the highest, and you see that it's bouncing up and down. Why? Because they're trying to create liquidity. They're trying to attract people and say, hey, we paused, we're accumulating, and they're expecting people to start building up liquidity, both sides, okay. Now the larger liquidity build up, let's say the stronger orders, obviously will influence the price to go higher, okay, and take out the weak liquidity. And once that's taken out, okay, then the market makers, they will come down to cancel the guys that never took action and come all the way down and liquidate them as well. Okay, that's why you need to be spot on with your decisions, right? And that's why we break down the price action with our G levels, okay? That's why we have the G levels, for us to help to make sure that we make a decision when the price action is going to reach a certain level, because it's like an alarm clock, like a reminder, hey, do something, because the market is moving. Make a decision, okay? That's why we have the G levels. Right, so now that we mark the areas, let me clear this old mess, okay? There we go, out, okay? Nice and clean. We can go down to 15, and what do we see now, okay? What do we see now? We see now that someone that wants to join now, because it's morning, it's 10 o'clock my local time, right? Someone is opening the charts right now and he's thinking, what are we going to do next? Well, you are on the G level, okay? If you don't have any trades open, fine, no problem. You just woke up, you open the charts, you're having your cup of coffee, and you're looking on Bitcoin, and you just say, is it the right time for me to enter? Well, okay, on the 15 minutes, you need to investigate if price action is going to hold above 119, because this is your starting point, okay? Why? Because it's a G level, right? This is your starting point. If even, you know, if you want to go down to 5 minutes, it's not a problem. But remember, on the smaller time frames, you need more candles. You need more candles as evidence, right? You want to see at least, let's say 6 candles, right? Which equals to 30 minutes, okay? You need to see price action stay above here, okay? And that is your focus area, right? Let's create a focus area and say, okay, this is my highest, this is my lowest, this is my focus area, okay? make it that we don't have well, it's got a latest target in there. Keep it yellow, but not the text in there. There it is. And speaking of which, let's make that as a template. Save as and make focus area. Okay, here we go. We've got a nice template. Focus area. There it is. So now that's my focus area. Okay, and now I have my conditions. You know your conditions. You need three. You need a breakout, a retest, a continuation. Okay, you need the ABC, so to say. All right, and the same thing you need if the price is going to break lower. You need something like this. Okay, that's what you need. That is going to be your conditions. I'm going to make them nice and green for you to go long, and this one to make it red for you to go short. So that is your two scenarios. Okay, that's what you need. You need a price action is going to break above the range, come back, retest, respect the range or respect the G level, and continue to the upside. Okay, you don't want to see it come back inside the range. And the same thing is going to happen if it fails. Okay, the next few hours, let's say that it's failing, right? Asia is done, and they want to shut down and take profits because they're going towards the close. They only got 2 hours left. Okay, so maybe they're going to say, okay, that's enough. We reached the resistance and we're coming down and we're exiting, right? So these are the two scenarios for Bitcoin today. For the people, they just open the charts right now, and that's it. So you're going to wait. Okay, either you're going to wait for the 15, 1 or 2 candles, or you're going to wait for the 5-minute candles. You need around roughly 6 candles to see, what is going to happen. Are we going to stay above the line, or are we going to drop the line? Now, if you see momentum, you don't need to wait for 6 candles, right? You're not going to count 1, 2, 3, 4, 5, 6 candles, and you see these 6 candles already reach 120. No, if you're breaking out the box, okay, how you're going to set up these? Okay, let's make this a case of going long, right? So this is my setup. I see that is moving out right now, so I'm going to take my chance. Okay, but I don't know if this is going to be a fake out or not. Okay, so I'm going to put my, let's say, stop loss not too far away from my G level, and not, if I see price action going out on the other side of the range, the focus area, okay, that means that Bitcoin, it is not ready to go higher. Okay, maybe it's going to deviate a little bit to come back. The timing, it's not right. Maybe in a few minutes, maybe in a few hours, it's going to do another attempt. Right now, it's not the timing. So that is going to be the setup right now, and my next point is going to be my next G level, and that's my target. What's the ratio? 5 to 1, 5, 3 to 1. It's fine. Okay, now all I want right now is I want to make sure that I stay above the G level. What is my risk? 25, 0.25. Remember how we do very quickly the calculation? Maximum 5% divided by 0.25. That is my leverage. I can do this with 20x on Bitcoin, right? And not risk more than 5% of my capital. Okay, which means I can go full wallet, which is not a lot. A lot of people do not find this very comfortable. I understand. Okay, but you're going to be okay under one strict condition, that you put your stop loss exactly here. Okay, put the stop loss exactly here. Okay, and don't change it. If you put a stop loss, you open a trade on your Bybit, on your Binance, it doesn't matter which exchange you're using. If you open a trade in futures and you're going right now full wallet with this exact setup, it means you can go full wallet on 20x leverage. Okay, and if the sad event, so to say, if that is going to come down and price action is going to trigger your stop loss, that is not going to be no more than 5% of your capital. So it is safe to do so. However, it needs one strict condition. Please put the stop loss in place. Okay, don't go blind. Okay, and see if Asia is going to push that price all the way up there. Okay, there's a higher possibility. I mean, I can delete these guys here. We don't need them anymore. That was a previous focus point. It's out of the way. All I need to mark, okay, is the 50%, and maybe I'm going to mark that guy here. Okay, I'm going to mark this area here because I believe that it's going to be a resistance area. So I'll mark this as a resistance if you wish to keep an eye on something. Okay, why? Because this is where the down momentum happen. Okay, this is the trigger. Okay, strong momentum to the downside. So I know I've got leftovers of selling orders. Okay, remember that that technique that we know inside the CIA, that 60% of the orders have been triggered here. The remaining 40 are still waiting to be triggered. So when the price action is going to come here, I'm going to expect coming down a little bit. Okay, so I know this area. And also, always, I would like to mark the 50% between these two guys. Okay, roughly. Just an estimate, a visual aid. There it is. Okay, so zoom in a little bit. Okay, so that's my stop loss. Make it bright red and not pink, not to confuse anyone. Here's my stop loss. Here's my entry. That's my expectation. Go all the way up to 120.8. Okay, that's my target. This is the 50%. I want to make sure that the price action later today, okay, is going to claim and stay above and continue, get rejected, but stay above the 50 and then continue. And then maybe I'm going to hit my TP. Now, will it happen in 1 hour? Will it happen in 6 hours? Maybe in the American session? We don't know. Okay, but this is a setup. Okay, so this is your TP1, your small point of interest, TP1. Okay, you want to make sure that you clear this. Okay, and this is your final TP2. It's not final to be honest. Okay, wrong term here. Remember, take out 80% or whatever is comfortable for you, maybe 70%, it's fine, and let the remaining 30, if it's holding and wants to continue, let that 30% run. Okay, now if I do this, okay, with 20x, what is my profit? I know my loss is 5%. What is my profit? Well, take that number and multiply that by 20. Okay, so 132 times 20 equals 26.4%. Take out the fees, let's say roughly 23%. Okay, generously, let's say it is 20%. Okay, so if you clear this TP, that is 20% profit, and that is 20% of your capital. Remember, that is a full entry. Okay, but if you lose, you're going to lose only 5%. Okay, are we good? I hope we're good. Right, that's the setup. This is how you're going to set up a long. Okay, in case that you wanted to go short. Okay, let's say that we had an opposite action, that the price came back. Maybe we're going to see that later. So I'm going to do it a bit to the on the other side. Let me do it on the left side. So my trigger will be, so to say, breaking out of my focus area. Okay, so let me do this like this. Okay, so that's my focus area. So let's say that I've been triggered to go short. Okay, my stop loss has to be above my G level, outside of the range, or just the top side of the range. Okay, if the price is turning around and getting out of the range, it's like okay, simple as that. And your next target will be that guy over here. Okay, the next G level. You're going to do the same thing. You're going to mark the 50%. Okay, here's your 50%. And you want, I'm going to do this pink. There it is, pink. And you know that you want the price action to continue to the downside. You're going to get a little bounce, but you want to find resistance and continue to the downside until you go to TP2. So TP1 is your 50%. Make sure you clear it. If you see weakness and that is turning around, okay, there's no need for you to lose that small percentage or win. Take it, close it, because if it's not breaking the 50%, it's telling you that it's getting rejected, that the price cannot continue to go lower. Okay, so don't waste that time, because I don't know for how long you've been in that trade. You could be in that trade for 5 minutes, you could be there for a few hours. So don't waste that opportunity. If you see that it's getting rejected at the 50%, it's turning around, close it, take the profits, whatever that is. If it's halfway, that is 10%. Okay, roughly, you see it's the same setup. 21% on the stop loss, 126 on the TP, on the target. So roughly it's 20%. So the 50% halfway is 10%. Take that 10%, okay, and then wait for the next timing that is going to be ready for you. Okay, right. That is going to be the setup. Okay, and one is going for long and one is going for short. And you got the G levels as your TP, your 50% as a checkpoint. TP1, the 50%. TP2 is going to be your G level, and then you're going to take a decision. Either I'm going to take some profit, okay, and leave some behind in case he wants to go further, okay. But guarantee, book that 20%, which is your daily target. Remember, your daily target is 20%. If you manage to take that 20% in one go, in one trade, good on you. Book it, close the computer, okay. Come back tomorrow. Don't waste hours just to gain another 10%. Leave that 30%, okay. Let that 30% run, and if the market wants to give you more until you come back next day, fine. You got your 20%. You guaranteed that 20%. You took the money out of it. Update the stop loss to a new G level, right, and let it run. If you come back tomorrow and it give you another 5%, 10%, fine, it's bonus. If not, and hit your stop loss, it's again fine, because your 20% is guaranteed. It's bank. It's inside your portfolio, and you just went away. Okay, you just let the trade open. The remaining 20% or 30% is up to you how much you want to do this. Okay, you let the remaining 20% just in case if it wanted to give you some more extra. Okay, which is not too bad. You're gonna be surprised that half of the times the trade will continue, and the trade will continue, and you can still make money. Okay, and next day you're gonna come back fresh, excited, happy, because the previous day gave you that 20%. If you're gonna come back to the chart and see that you have more extra toppings, right, the icing on the cake and the cherries, you're going to be more happy, and then you're going to be fresh looking for new positions, and you're going to do the same TA over and again. G levels, mark the point of interest, mark the liquidity pools, imbalances, and just wait for the price, the market to move towards these areas. Sometimes the market will move and be fast, sometimes it will not be fast. Okay, it's okay. Right, so we described both of the setups. Okay, I'm going to leave these here not to confuse people that we had an open short. We didn't, and that was an explanation of what if is going to happen if that went down. So I'm going to leave these open because it's in under progress. Okay, so I'm going to leave this open right here. Okay, and what are we going to do? This is the focus area. Now it's getting out of the range. Now it's coming back. Okay, so what do we expect? We expect a rejection, like a support. Okay, we want to stay above the G level, and we would like ideally to stay above the focus area. Okay, our range. That is the ideal scenario that we want to see. Okay, so let's see what's going to happen. If you see that is coming under inside the range and under the G level, you're gonna be something's not right. Okay, maybe the timing, it is not now that it wants to move. Okay, he's expecting more traders to come in and trade. Okay, he's waiting for more money to come in and build positions. And if you see that it's coming out, definitely you will want to stop out and say, hey, okay, I've got my stop loss there. Okay, you can do you want to mark the 50% of the range? You can do. This is only 5-minute time frame. You know, it's very tiny focus area. I'm not going to pay big attention about the 50%. You can do. I mean, you know, why not have something like this, and you can see that the low area is matching with the 50% at the top, so you can refine a little bit the box. It's fine. Okay, a lot of people will see if you lose that 50% of the range, there's no need to go all the way down outside the range. That is an option. That is down to you how strict you want to be with your TA and your setup. Okay, especially on a high leverage, you want to minimize the distance between entry and stop loss. I understand that on a high leverage, but if you plan the leverage according to your stop loss, okay, we already determined the distance. It was 0.25%. Okay, the distance between entry and stop loss was apart by 0.25%. Okay, and we divide that from 5 and it gave us 20. Okay, so that's why we have a fixed leverage of 20x because of the setup. Okay, so if the price is going to fall under that 50%, there's a high possibility that it's going to hit your stop loss. Okay, but you never know, it may turn around just slightly and continue. So that is down to you if you want to be that strict. Okay, you measure your risk. Okay, we measure that. We've done the calculations, we've done the risk assessment, and we determine the leverage. So we know and we are happy that if the price is going to break this area, okay, and go lower, it means it has no strength to go higher. That is a confirmation that it's losing it. Okay, it's telling me that the timing, it is not right to go long for the time being. Maybe a few hours later, when more traders are going to be approaching this setup like you. Okay, because you need volume. Okay, the volume that we create is nothing, so we cannot influence Bitcoin price. Okay, so you need to wait for others to come in, like whales and orcas and dolphins and sharks, the whole thing. You want all the animals and mammals inside the sea, right? So yes, so we are little fish. It's fine. I don't mind. Okay, to be called fish or a dolphin. It's all right. One day I will become a whale, like you. Right, ladies and gentlemen. So the prices carry on and it keeps going the way we want it. It doesn't have a big momentum right now, but you never know. Someone's gonna show up and push the thing up. Okay, look at that. So far the structure is looking good. The structure is looking good. Why? Look at that. Goes out, right? Small correction and it continues. It broke the previous high. Okay, it's not a deep correction. It's not a deep retest for the time being. This is 1 minute time frame now. Don't go bananas. Okay, but I'm showing you the structure. Okay, I'm showing you. Oops, come back. There you go. I'm showing you the structure like this. The price is going up, got rejected, push up, got rejected, it's pushing up. So what do you see? If I move that little, you see progression, right? You see that the previous highs are they keep getting broken. There it is. Okay, and that's the other one. There it is. Okay, so the structure, let me do these lovely neutral golden colors that we have. So you can see here that the price action is keep on breaking structure. It's taking out the previous highs. Okay, so these highs are weak, so to say. The lows are strong. Okay, they're defending. They never broke a low. So far, so good. Right, this is how you progress and keep track of the price action. Now, do you want to do this on a 1 minute? It's fine. Do you want to do this on a 5 minute? It's even better. It's up to you how comfortable you are. Okay, when you're doing intraday and scalping, 1 minute is fine. Okay, by now you're used to it. Bitcoin is not going to be so volatile on a 1 minute. Okay, if it moves, it moves. The 1 minute scary roller coaster chart is going to be on small market cap tokens, right? Really small altcoins. So yeah, that's it about Bitcoin and the setups and how we monitor them and how we keep an eye on them. And so far so good. We're breaking structure. We just need a continuation. We just need time and volume for us to reach TP1, right? And then see if we're going to claim that TP1 and then go up to TP2, which is going to be up here, right? So it is up there. And the ratio is 1 to 5. It's not too bad. You're risking 1 to gain 5. Okay? You're risking 5% for you to get 5 times that, which is 25%. Okay? But take out the fees, entry fees, exit fees, maintenance fees, funding fees, blah, blah, blah. You're going to lose 2-3%. So you're going to guarantee that 20%. And, I wish you that you're going to have that in one go, in one trade. Good morning, everyone. Let me see some of your messages. It will be nice to see. I see Bassman is here. Good morning, sir. I see Bunny Bumbly, of course. Stelios is here. Everyone, every day is a good day. Everyone's doing well. I hope everyone's doing well. Good stuff. Right, okay, cool. So this is how we monitor Bitcoin. Let's see if Bitcoin wants to continue. Every day is a good day. Okay, remember this. Every day is a good day. Why? Because you're alive, you're awake, you see the skies, you hear the birds, you see the sun. It's a good day. It doesn't matter if it's a rainy day or a snowing day. It's alive, right? You're alive. Okay, so the sun is up. Doesn't matter if it's covered. So it's a good day. Okay, we are here with the live ones. So it's a good day. Always it's a good day. Now, every day you can assess the charts and try to find a direction. Right now, okay, the direction is up. Okay, look at that. Since midnight, okay, since midnight, this is around midnight, 4 o'clock, this is Asia Open. Since the, since Asia Open, the session this week, they're pushing the price up. So you're in an uptrend. So if you're doing intraday and scalping and day trading, you need to find a direction. Right now, the direction is up. So you're going for long. You find a focus area. We found a focus area. Okay. And we just have 2 conditions. Continue to the upside. So break out from the range and you go long. You mark your TPs and you're good to go. Okay. You need to make a decision. It's a reminder. You need to do something here and you need to do something here and expect a reaction in this region. Why? Because it's resistance. That's all. You don't want to find yourself in surprises. If you see that the price is coming down, you don't want to panic. You know why. You just need to go and look left and say, oh, right, okay, I have a huge selling order here, which I know roughly 60% has been executed and the 40 remaining percent hasn't. So if the price is going to go down, I do expect and I do understand that it's going to come down for a little bit. Okay, so if the price is going to come down, I'm not going to panic. Okay, I'm just going to wait and see what's going to happen with the 50%. If I lose the 50%, then I say, hey, I need to cut these because I don't want to waste that profit from here to there. And that is 10%. It's halfway. That is 20%. Right? So if you're going to lose that, make sure that you don't lose that 10%. It's a shame. You'll be waiting for so long, hours, minutes, it doesn't matter. You are inside that trade. You don't want to lose everything. Go back to zero and then do nothing and then you get stopped out. And you're like, oh shit, bugger. I went all the way up to 15, went down to 10, went down to 0, did nothing. And then it finally hit my minus 5%. And then you're going to be upset that day, that trade did not work out for you. Well, it is not the market. And it's not the strategy. It was the lack of your decision that you didn't take any action. Right? That was a problem. Not Let me put that at the back. Settings, visibility, order. Send that backwards and then leave that line clear. Okay, here we go. All good. Right? So, don't wait and see that it's going to come back, because a lot of people have this issue. My TP is up there. All right? It's going to go there. There's no guarantee. You have a G level and you want the price action to hit that G level. That is your expectation. Now, expectation with reality, what is going to happen, are two different separate things. We don't have the crystal balls, okay? But we've got the G levels, which is better than the crystal balls, right? We know this. We've proven this, that the G levels are better from crystal balls. So, that is your targets. And now you just need to monitor and take decision while the price action is going like that. It's the same thing that you're doing with your daily life. If you're driving, you get into the car, you're doing the same thing. You enter in the car, you start up the car, and you drive down the road. Okay? And every day you go on the same road. So to say, if you want to go from your house to the supermarket, you have two fixed points, which is your home and your supermarket, that don't move, right? So you have one way of going. So every time that you want to go to the supermarket, you're going to go the same way. But every day it's going to be different. Every route is going to be different. Every time you're going to go to the supermarket, it's not going to be the same time. A. It's not going to be the same weather. B. It's not going to be the same traffic, right? And also, sometimes you're going to find yourself that your road that you're taking every day, that one day they have works, right? And they're doing maintenance and you have to find another route. What does it mean? It means that you need to make decisions every time. Different decisions, different timing decisions. Because you're going out at a different time, you find different conditions, so you take different decisions every time. When you see a red traffic light, you're going to stop. Another day, you're going to pass the same road and you won't find a red traffic light. It's going to be all green. Everything's going to be so synchronized with you and everything's going to be green. So you have different decisions. But your path is always the same. Your target is always the same. You're going to the supermarket, right? So this is what you have to do with trading as well. Okay? One day, we may have momentum and Bitcoin will skyrocket. Good. Another day, it's going to be up and down, choppy. Another day, it's going to be really stupid, right? Things is going to look like going up. It's going to be a fake out, liquidity grab, and then it goes exactly the other way around and very aggressively. And takes you not by surprise, but you're like, oh shit, I've been waiting to go up. 5 hours I've been waiting to go up, and then within 10 minutes, it went all the way down and hit my stop loss. It can happen. That is not your fault. Okay? The conditions that you're going to meet on the way to the supermarket, right? The traffic, the maintenance work, whatever, the weather, rain, snow, slippery roads. Every time the conditions are different. So you have to adapt. You have to make different decisions while you're driving. Okay? One day you're going to decide, oh shit, the weather's so shit. Okay? I don't feel like driving today. I'm not going to put myself at risk. That is the days that you're not going to trade. You're going to see a market that is so choppy, it's doing nothing but nonsense, so to say. And you say, hey, you know what? I'm not risking it today. I'm going to take a day off. And thank God that you don't have a boss. Right? And you decide that you're not going to trade. It's that simple. Right, okay, good. Lovely. This is Bitcoin. Okay, just let it go. Let's have a look a little bit. We haven't done the ranges for some time. It's okay. Why? Because the ranges are useless when the price action is going towards your all-time highs. Okay, I don't lose faith on it, but you know how to do minor ranges. Okay, you know how to do it on a long-term layout or setup here. We can see that the price action, it pushed all the way up, got rejected exactly on G level, came back a little bit correction, and now it's trying for an next attempt. How is the 7-day stochastic RSI? It's looking very positive. Look at that. It's pushing. We are inside the overbought area. It's okay. Let's see if we're going to break the 122. 15 days is looking strong, heading up. 30 days is heading up, and we know that we have a resistance line. It's going to take some time to get up there. Okay, this is the 30-day. So far everything is looking bullish. I mean, all the stochastic RSIs, okay, looking bullish. Okay, now this is the live updated stochastic RSI. Remember, we have disabled the wait for time frame close. So it's not going to wait for 45 days to print a line. Okay, this is like dynamic. It's always live and printing, which is good. Okay, we want to, see what's going to happen every day. Okay, so we have all the indicators right now pushing to the upside. Okay, let's see how far will it go. Okay, we are not scared. Okay, we got our levels: 122, 135, 149, 162, and the sky is the limit. We can go all the way up to 323. Okay, and if we need another G level, that's not a problem. We can sync a lane and duplicate that and put it above, and then we can continue. Just give you a small demonstration of how you're going to do these. All you have to do is just duplicate that, because you need to keep the same frequency, right? You don't want to change the frequency. So let me do these. Let me unlock that, duplicate that. Move that out of the way. There it is. And I can put that exactly, right? It's ridiculous, but you can put exactly on the previous level. Okay, you have to match that number to 323, 236. That's what you have to do, and 61. Okay, so mark that number, right, which is going to be 323, 236.61. Right. Okay, that's the problem now. You change the range. Okay, let me remove that. We have to do it manually. We don't want to change the range. We just want to match the numbers. And we're going to do it a bit manually, but it's okay. You get the idea. This is how you keep it. When I fix the numbers, right, what happened with the G level, he fixed the low number, but he kept the high number higher as fixed, and that's not the purpose. We want both roughly like this. I mean, I can do this. It's gonna take some time, but you get the idea. You clone it, you align it, and then you have a continuation of the G levels. And we can go all the way up to 500,000, even more. Okay, and it's so simple. It just needs a little bit of time to align it, and that's it. Right? You don't panic. You're never gonna run out of the G levels. I promise you that. So the weekly is looking good. Right? So we've got another G level, 135, 149 for the time being. Okay. We're gonna focus on the next two G levels. That's all. 2 G levels. And time-wise, until September, end of September, right? That's it. That's what we want. Okay, good. Let's have a look a little bit on ETH, right? Oh, let's have a look on CME gaps. Let me do this a little bit here for the time being. Let's remove the weeks. CMEs, we don't have a new gaps, right? From this weekend. We have the CME gap all the way down to 113. Remember, there is a high possibility. Liquidity around 115. Remember, where's 115? 115 is exactly 50% of that imbalance. Okay, that CME gap. So there is a possibility later, not today, maybe later in the week, that it's going to come down to 113, 115. There is a possibility to take out liquidity. Maybe it wants to take liquidity first from above, and then it's going to come down later. Okay, maybe it's going to do a surprise by Wednesday, and it's going to throw go all the way down. We never know. We just have the CME gaps marked. We have the numbers marked on the chart. We have the G levels, and we just go level by level. Ethereum, look at that. Look at that progress. I mean, you know, we were monitoring ETH down from 2,375, but look at that. Right now, ETH is at 3,792. Okay, that is looking very, very promising. Let me zoom out a little bit and compare what ETH is doing. Look at that. Right, we approaching another strong G level, 3,871. Look at that, rejections. Okay, that's gonna put ETH again on the test. Right, rejection, rejection, rejection. What is gonna happen here? Right, interesting. With a different volcanic accent. Interesting. So we know that we're approaching, you know, a very strong rejection level. Okay, so I can put that a little bit, give it a bit space. There we go. Nice and lovely. Right, here we go. So we're expecting, okay, because it's an uptrend. It's a very strong uptrend. So ETH is doing fine. Okay, pushing and pushing. And we want to see that it's going to touch again. Okay, it's going to touch again 3,871, and ideally we would like to find support. You can see the early signs of rejections. Okay, it's understandable. We've been rejected here multiple times. Okay, let me zoom out a little bit. Multiple times we got rejected here. Look at that strong selling point. Remember the trick? You know that you got 60% executed these orders. The remaining 40% will be executed now that we're approaching this area. And this is what is happening now. Okay, where's my price action? I've lost the price action. Where are you? Come back. Oh, there it is. I find you. So there it is. We're approaching this area, which is our G level as well. And you can see a little bit of reaction. We've got influence. Look at that abandoned wick. We got pushed up, but look at that abandoned wick and pushed up again. So now ETH is going to accumulate and trying to fight this area, and then finally later on, that's the ideal plan that we want to see ETH breaking and find support above 3,871, and that's going to be the time. Okay, let's go back to 12 hours. It's going to be the time that we're going to break these guys. Okay, hopefully. Okay, break these guys and go further up. Now, the all-time high for ETH is 4,868. If I wanted to find an extension, just enable extension 1, and then you can find other numbers. If you want to have more extensions, go with max. Okay, and you can see where you can go. Look at that, it goes all the way up to 23,000, almost 24,000. But before that, level by level. All right, look at that. The next key level is going to be 4,868. Right, there you have it. Meanwhile, you have other G levels in between. You can break these G levels as well with 8 if you want to. From now to break this guy down, break this guy, put 8. Okay, you have in between G levels. March the numbers. Okay, align the numbers. So you got 2 points, 8, 6, 8, 53. And then the other one is going to be, just move on the side please, 3,871.40. Mark these as dashed line, make it a bit thicker for you to see visible. Take out the overlapping numbers, we don't need as much. And expand a little bit. There it is. There you go. And now you have the next levels all mocked up, locked up, in place. And in case when, let me do this a bit thicker because our key levels. So once we got ETH above 3,871, these are the next level. Nice. Nicely done. Mocked up, ready to go. There you have it. Nice and easy. So ETH is doing well. Let's have a look at a little bit on the chart between ETH and Bitcoin. Looking very strong. Look at that. Looking very, very strong. This is a 90-minute time frame. Ethereum against Bitcoin. Ethereum is overperforming Bitcoin. Pause a little bit right now. It's okay. It's fine. We don't mind as long as that is uptrend. It's looking good. And speaking of which, let's have a look on others. Lovely. The others are moving to the upside. This is the others compare Bitcoin. So the altcoins are overperforming Bitcoin right now. They're moving in the same direction, but the others, right, the altcoins are performing better in percentages. So if Bitcoin is doing 2% per day, so to say, right, roughly numbers, the others can do 5, 10, 15, 20. Okay, and the smaller market caps can go bananas, but also someone can dump it. Okay, even that the market is going up, but it's okay. Everyone has a different cup of tea. You may like the altcoins. I'm not going to be upset and sad and mad with you. You're going to do whatever you like. I prefer, due to the manipulation of the exchanges, that's my reason that I stick to the big guys. Right? Remember what happened with my account with Bybit on the smaller market caps. Very easy to be manipulated, right? So I didn't like that, so I stick to the big guys. Now that I've stuck to Bitcoin and Ethereum on Bybit, it is more solid. It is more controlled. I don't get these silly events happening again. Okay, so I'm happy with that exchange. With your exchange, maybe things are different, and you're okay with the altcoins. It's not a problem. It's not a problem. But remember, the lower the market cap, the lower the leverage. Okay, don't go bananas with it. Okay, because 1 minute you can be rich and you're gonna order the Lamborghini, and the next minute you're gonna be poor and you're gonna cancel that Lamborghini. And that is a true story. It did happen. Okay, I think it was back in 2000. Was it 17? I think it was around 17 that Lamborghini came up and said in the same year it broke 2 records. Okay, one was the ordering record on sales, people that start ordering Lamborghinis, and the same year, I think like 3-4 months later, okay, they had another breaking record of that amount of cancellation. Okay, usually the company is expecting a 5% cancellation, 10% cancellation. Okay, Lamborghini, I think they had like 50% cancellation, right? And that is because a lot of people got excited with Bitcoin, and then when Bitcoin dumped, obviously they panicked. Right? So yeah, don't be that example, right? But it's up to you. Seriously. Okay, so here we go. Bitcoin is dropping down. Okay, fine. We just took our hours away from Bitcoin. It's okay, not a problem. We're not panicking. We have to do our TA and market update. So let me clear all the nonsense here. Boom, boom, boom. Trend line. Do we have a trend line? Yeah, we have the horizontals. Yeah, sure. Okay, no problem. We're good to go. No Picasso drawing. It's okay. It's fine. It's part of the retest. Okay. Now here, even on the 1 minute, you can see that we kind of, right, we're breaking structure here. Look at that. Okay, this is kind of the moment. What are you doing, Bitcoin? What is this? Did you commit suicide? Right, look at that. Abandon wick. It went all the way down. It broke that little structure. It broke that little structure. Okay, but that was the main structure here. You can see a big rejection, like long candles, many candles, plenty of candles. Right, and when you see a bounce, nice, it's coming down, and now we broke the structure. This is the moment. This is kind of reversal play. What is this? It's going to be a fake out so soon? You never know. It may be. Okay, but I have the plan. I'm not panicking. Okay, I'm still above my entry. And let's see what's going to happen later. My TP is 50%. Okay. We just need a momentum. We just need volume. We just need traders to be positive upon Bitcoin and trying to push it higher. That's all we need. Okay. Now on the 15 minute, it's not looking that great because that engulfs that candle here. Not nice. You're not playing fair Bitcoin right now. It's not Bitcoin, it's the traders, right? It's the market. So that is a little bit of warning sign because you have an engulfing bearish candle. It took out that price action push to the upside. It's been taken out completely. But we're going to monitor it because you never know. You may get another engulfing candle and push to the upside. So don't lose faith. You have the plan. You have the stop loss. Here's your loss. Okay. This is your last resort. Okay. Ideally for me, okay, the big problem is going to be when I'm going to breach my G level. Okay. That is going to be the moment. And maybe that's going to be my buffer zone. Right. If I lose that buffer zone, then obviously I'm going for my stop loss. And sometimes I may take a decision, say, hey, listen, if you lose my G level, you're losing the 50%. I may take a risk to cut down my trade sooner, way sooner, to cut down my loss. So instead of 5%, I lose 3% or 2.5%. All right. And if that price action is kind of come back and play my breakout, I'm going to re-enter again. Okay. Plenty of options. It's down to you. You're going to ask yourself, if I'm going to do this, I'm going to be happy, or if I'm going to let it and hit my stop loss 5%, knowing that I had the chance because I see it, I saw it, I did think about it, but I didn't take any action. Am I going to be happy with it? If you're going to be happy with any decision, fine. You stick to the plan. Okay. Ideally, this is the plan. This is my stop loss. I know this is 5%. I know that I'm okay to lose maximum 5%. If I get triggered, I shouldn't be sad. Okay? Think about this. If you get triggered by your stop loss on the calculated risk assessment that you know that it's no more than 5%, you should be happy. And you say, thank God that stop loss got triggered because now I'm not going to lose no more than 5%. So that 5% is okay because I was okay by taking that risk. So if that got triggered, you should be fine. Say, okay, I knew the risk, I took the risk, that was 5%. Okay, you should never feel sad about triggering your stop loss. That is the right trader mindset. You should be happy that you had a stop loss and stop you out at exactly the moment that you wanted. 5%, 5%, 3%, 3%, whatever that is. Okay. So let's see now if Bitcoin is going to recover. Okay. We have this structure. We want to see Bitcoin breaking that structure. We want to go above. Let's see what's going to happen. Okay. Whatever the outcome, we exercise the conditions, the plan, the leverage, everything, the stop loss, the TP1, TP2, everything. Now we just want the market to play fair with us. If the market is not going to play fair with us, it has nothing to do with our strategy, with our approach, with our conditions, with our plan. We did everything by the book. Check. Done. Okay, now it's done. It's down to Bitcoin to behave. If Bitcoin doesn't want to play, you're going to say the same thing. I don't want to play either. That's my stop loss. Boom. 5%. I don't want to play. You're mucking around. You're having a joke. Simple as that. Okay? Right. Okay. Very quickly. VIX. We're still in the green. A little bit jump here from low to high, but still in the green. Open interest. It goes up and down. Let's have a look here. A little bit drop, but now it's rising. Okay, good. Right, let's have a look a little bit on hype. Okay, we were monitoring hype down here. It went all the way up there. Look how many G levels. 1, 2, 3 G levels. And then big fight here. Look at that fight here. That's retail. Okay, but you know who wants. This is Wells and this is retail. Who's going to win? The Wells. They're shorting, right? It's going down. Find some support. a little bit deviation all the way down to 50% of the range. So that is roughly visually this is at 50%. So it stopped around 50% and turned around, double top, abundant wicks, 1, 2, 3. Let's see, hype, and maybe it's going to come down a little bit. Tesla is on the rise. Look at that, it's going up. Let's see later today on the US session. Quantum, okay, accumulation. Solana, look at that. Hello, Solana. We monitor that area that we said on Friday that if we're going to lose that area, it's going down. Indeed, only one buy level. You never know how long it's going to go. You see, it went one level and then accumulate. It never touched that level again. Broke, got rejected, broke, right? Found support. How many times? 3 times. Abundant wicks. 1, 2, 3. Push. Okay, so let's hope that Solana is back in the game, right? He had a nice strong uptrend. It came down, correction, accumulation, lost one G level, but claimed that G level back. And the good news is that once he claimed the G level, he came back and found support. So no more rejection. It got rejected as a support, right? The price got rejected by falling, so that's good. Right, that was weak, that is strong. Okay, we fall, got rejected, came down, got rejected, came down, but no, so that was insisting, got rejected as a resistance. Okay, fine, that gave us an opportunity for traders to see this as a very strong support, 178. And look at that, exactly on G level. Don't take any BS from anyone that the G levels don't work. Of course they do work. All right. This is the CIA G levels. We have our own tools. Right, so Solana is looking very strong. Look at that. We broke 187. We have now to break another, we have to break another G level. We need to do another breakdown. Come on, let's update this guy here. Let's do F4. Right. Match the numbers. 205 and 39, please. And the other one is 187.44. Here we go. Take out the overlapping lines. We don't need double lines. I need dotted and please a bit thicker so I can remember, I can see them nice and clear. And there you have it. Lovely. Okay, there it is. And Solana is breaking structure nicely. Look at that. After that, we found nice, lovely 3 strong supports here. Pushed to the upside, got rejected on the G level, but it broke structure. Right, it broke the previous highs and also broke the G level. Maybe it's going to come back to retest. It's going to be fine as long as it's going to stay on the structure. Right, where it was rejected to find support. Find support to then continue to the upside. That is going to be absolutely fine, a continuation to the upside. A little bit abundant wick here, so we know it's going to come down. We don't want to lose 187. Okay, Doge is doing fine, all pushing to the upside. Okay, and that's it. That's it for today. Any questions? Any tokens that you would like to chart? Let me know on the comments below. I'll be watching. I'll give you a minute or two, and let me know which token you want to chart. As Stella says, level by level. That's it. Yeah, it is. It's true. It's level by level always. And have a nice dinner. Good stuff. Good stuff. Okay, ladies and gentlemen. Level by level. Don't take anything by granted. This is run by algos. Remember, 80% is run by algos. It's on computers that creating these lovely candles go up and down, right? Yeah, so the algos will get influenced by the heavy weight of the orders from the institutions, yes, but there's no way for you to know, okay? There are special accounts that other traders may see data way before you, yes, that is the case. I'm not going to say it's a special community, but it's a special service that you pay bigger prices for you to get more data, more accurate data, more faster data and stuff like that. Don't forget that we get the data through third parties. So let's say that the event is happening, it goes to a third party that only deals with the data of the prices, and that third party is going to give it to the exchange, okay? And then the exchange will have to do the own algorithm to recreate these chains, these prices for you to see it. So it goes through various steps, okay, on the way down the ladder to reach that data to you. So kind of, in a quote, we get a delayed data, okay? And now, because you have a free account on the exchange, you don't get these special services. Other brokers, not exchanges, brokers, they may have a service that you have to pay higher price, okay, like thousands per month, for you to get not different kind of data, but a bit earlier, okay? This is not manipulation. This is like, you get what you pay for, right? They have different services everywhere. So other people see some differences, changes before that, and they can make decisions way earlier than you. So that's why I don't want you to focus on predictions, and I don't want you to focus on what you're feeling or what you see, and you just need to mark down level by level and say, hey, this is my G levels, and this is the time that I need to make any decision according to what I see on my chart. It's my money, it's my investment. I need to control it. I can't rely on somebody else. So that's why we put the lines there. It's like the elevator, right? You're inside the elevator, you're on the ground floor, and you press number 10, right? So you're expecting to go on the 10th floor. But before you're going to reach the 10th floor, you have to go through, the first one, the second one, the third one. And every time that the elevator reaches a floor, it lights up the light inside the elevator, right? So now we're on the second floor. Now we're on the third floor, okay? So it's the same thing that we do with our G levels, right? We need to see our floors, and we need to mark the progress. That's what it is. And once you reach your floor, the doors open, and that's the time you need to get out. It's that simple. You just need to make sure that if you want to go up, you just make sure you go into the elevator that it goes up. How many times you think that the elevator is going to go up and the doors close and it goes down to the basement, and you're like, oh shit, it's going down. I have to wait more, right? It's the same thing, guys. It's the same thing. We need to keep it as simple as possible, as stupid as possible, right? Because we need to make sure that we keep these emotions out of our trading style. Right. Okay, guys. Have a lovely, lovely day. The rest of the day. It's a new day. It's a new week. Enjoy it. Go level by level. There it is now. Kind of Bitcoin is trying to break the structure, that yellow line. Please break it. Right, find support and continue your way up. Okay, that's what we want. We want something like this, and then continue, take that high, come back. Right, it's not going to be always in one direction. It goes up and down, it goes up in waves. Okay, don't panic. All right, that's what we want to see. You have done your calculations, your risk. You're gonna be good to go. Don't you worry about it. Right. What others? I mean, how platinum is doing. The undervalued. It's going up. It's good. What gold is doing. In accumulation phase, roughly. Let me go to a bit higher time frame. Yeah, it's an accumulation. Right, gold in accumulation. What about silver? Rising. A little bit correction, rising. Okay, looking good. Let's have a look on the oil. Okay, that's good. Oil is coming down. No panic in the market. It reached 69 and it's coming back to 65. Good. I hope the gas stations, they're gonna move the prices down next time you're gonna put petrol on your car. They usually don't, they're buggers. They're very fast to put the price up, but they're very slow to put the price down. Right, natural gas is going down. Okay. That is some other stability. 90-minute time frame. Okay, it's looking back to normal, so to say. Normal areas. $3.39 is looking good. Nice. SPX rising. Look at that. Lovely. Climbing these. You know, you see the G level 6,145. Look at that. Rejection. We broke it. It's going higher. Nice. Nasdaq. Okay. Keep rising. Dow Jones rising. Good. What Europe is doing? Europe is doing terrible. Europe is dropping. Oh dear. Okay. What about Germany? Weakness as well. All right. It broke the structure, but strong deviation. Lower high. Okay. Europe's not looking that good. UK. It's trying to push. It's doing better than Germany though. Japan, accumulation. Hong Kong, pushing. China is pushing, baby. Look at that. China is pushing. Right. Okay. Dixie. Okay. Small drop on Dixie. That helps for Bitcoin. That's good. Right. Okay. That's it roughly. You know all the charts. I've shared these no, it's not a playlist, it's not music. That watch list is been shared with you, so you have it inside the Discord. Let's have a look at Dominus. Dominus keep on dropping. Keep dropping, baby. Keep dropping. That's good. And let's have a look a little on T1. T1 pushing, rising. Take out the previous all-time high, 3.9 trillion. That is good. Fresh money coming in. That is good. New all-time high, baby. It is, isn't it? 3.9. Yeah, it's a new all-time high. Look at that. This is the weekly time frame on the T1, pushing 3.9 trillion. Okay, what about T3? T3, once again, we broke the 1 trillion. Let's go down to 12 hours. Okay, you see that 50% that we marked? Small rejection, a little bit fight, but it's growing. It's growing, and it's going, and it keeps going, and it's going towards 1.13 trillion. So far, so good, ladies and gentlemen. So far, so good. Others, that is not compared to Bitcoin. This is just the market cap of others. Okay, excluding again top 10, but this is the market cap. Okay, this is the market cap of the altcoin. So you can see that the altcoin is rising. And this is the performance against Bitcoin. So that is, both of these charts are looking good. So kind of we're going towards altcoin season. Dominant is Ethereum. Okay, that is looking very, very nice and promising. Look at that. Nice. Everything's looking good. So let's hope that Bitcoins continue to push the upside. If you want to trade ETH, you're going to do the same approach. And maybe you're going to have a better luck with ETH because ETH for some time now is overperforming Bitcoin, right? That's why I trade Bitcoin and ETH. Why? Because ETH is on its turn, okay? Bitcoin and ETH. When Bitcoin is accumulating, ETH is moving. So you can trade ETH as well, okay? Right, okay. I don't want to delay this anymore. We've been doing this for 1 hour and a half. I don't want to take your morning. So I wish you a lovely, lovely day. Have a nice one. And I'll see you again tomorrow. Right? Same spot. I'll see you tomorrow. Take care.